Good afternoon. We're coming to you from Berkshire Hathaway Home Services Home Sale Realty and the Donna Shaw team. Here I'm Donna Shaw. And
Scott Lee.
So we're going to be starting our first afternoon around the house. So you have to bear with us because this is our very first time doing this. So we might have some bloopers, so we thought with all the crazy times going on, we're going to send out some information to help our clients, our neighbors, and our friends. So we started to talk about the mortgage deferment, and Scott's going to fill you in about this.
So here's the breakdown, real short and sweet on the mortgage deferment. There's going to be a lot of questions in your minds, similar to, can we continue to afford our mortgage payment? How long can we defer our mortgage payment? What are the two types of mortgage deferment? What happens with the interest on our loan? Will I incur late fees? And how will my credit score be affected? So let's define the terms first. For forbearance, the lender agrees to suspend or reduce the number of your loan payments to allow time to get your finances back on track in order to pay off the past due amounts. Your bank may choose to restructure your payment amount, payment schedule, or request a one-time lump repayment at the end of the 90 to 120 days. So it's critical to know which option you will fall under. Extension is when the lender agrees to suspend the number of your loan payments for a period of time and add these payments to the back end of your loan, extending the length of your loan term. This could conceivably add to the overall cost of your house. So question is, due to the coronavirus, I'm not working. What options do I have to reduce or suspend my mortgage payments until I go back to work? Most importantly is contact your lender directly. Many have set up message centers due to the high call volume, so everyone's situation is unique, so you must talk to your service representative. Some banks are deferring loan payment for up to 90 to 120 days. This is called forbearance. Some banks are suspending the loan payment for up to 90 days. This could be an extension. Important fact, most banks will continue to accrue interest on the loan no matter how it is restructured. So even though you haven't paid your payment, the interest is continuing to grow. Most banks are also waiving late fees and will not send a negative report to the credit bureaus. Understand, if you elect to take either of the aforementioned options, the interest will still accrue. So what does that mean? You are effectively adding the amount of interest charged on your loan. Your credit score is not going to be affected if you choose mortgage deferment at this time. The banks are not reporting late or waived payments to the credit bureaus during the coronavirus crisis. In many cases, late fees will not be charged either. So most importantly, let me repeat it. It is in your best interest to contact your bank and discuss your personal situation with a representative. Everybody's situation is unique. A couple other key points is there is no guarantee that the government will defer the property tax payments as currently due. So will you have enough savings to cover any amount that you have deferred, as the deferment will also reduce your escrow total? Again, consult your lender. Will they allow you to make a partial payment and apply it directly to the escrow amount? Donna, can you go into a little bit more detail on escrow, please?
Sure, Scott. So some people have their escrows into their payment. It was called a PITI payment, P-I-T-I. So your principal, interest, spring taxes, which come out in the springtime, which is also your county municipal tax, those are in your escrow, and your fall tax or your school tax, that comes out in the fall, that's also in your mortgage payment, along with your homeowner's insurance. So you have to be aware that all of those are in your mortgage payment. So what happens to my escrow if I decide to take the deferment on my mortgage? Well, if you don't pay your mortgage, then you're not putting money into your escrow account. So every month, 1/12 of the total amount of your yearly taxes and 1/12 of your homeowner's insurance goes into your monthly payment. So if you don't put money and you don't pay your payment, and those monies don't go into your payment account for your escrows, and when your taxes come due, you may not have enough of money in your account to pay those bills. So what happens if my taxes and my homeowner's insurance doesn't get paid through my escrow accounts? So if you do decide to do the deferment and you do not pay your payment, you're not paying enough of money into your escrow accounts. So if there isn't enough of money in your escrow account, the mortgage company will send you a separate bill. They'll take the money that's in your account, and if it is not enough, they'll either send you a bill for the difference, or your account will increase your mortgage payment. So if there isn't enough of money in your account to pay your homeowner's insurance, the same process will occur as your taxes. If your homeowner's insurance is dropped because there isn't enough of money in your escrow account, the mortgage company is able to instate another company to pay your homeowner's insurance, and your escrows will increase along with your monthly payment. So Kendra, there's a difference between private mortgage insurance and mortgage premium insurance. Can you go into that?
So I've had some questions, does my principal mortgage insurance or my PMI cover the payments if I can't make them? If you had taken out a loan and you didn't have 20% down, there's a good chance that you paid some sort of principal mortgage insurance. So that being said, it's a yes and no answer. No, it does not cover them for you if you can't make your payments. But yes, it does cover the funds to the bank that they won't receive a payment from you, so they need to get the money somewhere. In short, PMI is required insurance that you paid either pay monthly in your mortgage payment as a flat dollar amount at closing on your home, or a combination of both. This insurance provides benefits to the mortgage company should you default on your payment. The mortgage protection insurance, that's an optional insurance. So that would be an insurance you would take out on your own from a third party. It does cover the cost of your mortgage payment should you lose your job or become disabled. It can also pay off the remainder balance on your loan should you die. So one note, you should actually have this optional coverage. If you have this optional coverage, you should really read the fine print. It may not cover HOA fees, property taxes, or homeowners insurance once again. So it's important to know, if you haven't taken out that optional, you just don't have any options. The banks are covered, you're not, by making a payment. So once again, to summarize, anybody who took out a loan with less than 20% down, you probably have some form of principal mortgage insurance on your loan, or PMI. This does not benefit the homeowner in a time of distress. This doesn't mean you don't have options. Your mortgage company, once again, may be offering some kind of deferment plan, so please call them. If you took out the additional mortgage protection insurance through a third party, definitely call them, check on your policy, and see if this corona situation is going to fall, that you're able to use that. We are in a very difficult time right now, and there very well may be fine print that it still may not be an option. If this insurance, this mortgage protection insurance, sounds appealing at this time, just because of what you're going through, we should talk.
So refinancing, trying to wrap this up quickly. So is it a good time? We've been in our house for a while. Should we refinance? Well, this can depend on your interest rate that you have now. The rates are actually fluctuating every day. And if your rate is above 5%, it might be worth talking to a mortgage lender. They would be able to talk to you in reference to the fees that are required to refinance and what your new mortgage payment would be if you decide to go that route. Maybe a 15-year mortgage might be a good option for you as well. So you need to look at both scenarios. So to recap, if you continue to make your mortgage payment, do so. Estimate how long you could be out of work. Will you be able to collect unemployment? Will it be able to cover your mortgage payment? Know that you will be required to pay the deferment back. Can you add something to each payment to make it up? Will you be all right with adding payments to the end of the loan? Do you have money to pay your taxes if you don't escrow? There is no guarantee that the tax payments will be deferred. So call your lender, speak to a representative, reach out to one of us, and we'll point you in the right direction. Scott, here's a couple banks. Do you want to give them the information?
Basically, Donna, I grabbed like 10 of the top local banks around just to go ahead and have some information for them. All this information is on your mortgage information. It's on your statement that you get each month. But again, it's just as a service. I thought we'd throw them up on a slide, and somebody wants to take a picture or jot it down real quick, they can.
That's a good point. When you look at your mortgage statement, call the mortgage number, consumer number on there.
So we hope to be holding these sessions weekly. If you have a question or a topic you'd like us to address, please let us know. We want this to be as interactive as possible and answer questions that I'm sure many of you have, especially in these unique times. If you need immediate answers, please do not hesitate to contact us by phone, text, Facebook Messenger, email, and we'll be glad to help you. Here's our contact information, both our cell phone numbers and our email addresses that you can use.
We're excited to bring this to you. We'll get together every Thursday and look for it on all our social media sites. It'll be called, guys, what's it called?
Afternoon Around the House.
Thanks so much. We'll catch up soon.